They gon' love me for my ambition. Easy to dream a dream, though it's harder to live.
The first pair on our top 6 weekly pairs, we have the USDJPY. So we're going to analyze the USDJPY as the first pair in our top 6 weekly pairs. Now we're going to start by marking the highs. You can see this is the previous high that the USDJPY has broke and has moved to the upside to form the highest high that it has ever reached. So what matters is how it broke and how it has reached its highest high. So looking into the market, if I would zoom out for you to see clearly the bigger picture. So we're looking at this picture. Looking at this picture, you could see previously that the market have showed us of our previous chart. You can see, looking at our previous chart, what we had on the market is that we had a corrective move to the upside. Analyzing that, you could see that the market have just moving correctively to the upside after it has broke its previous high and forming this ascending channel. We know that an ascending channel, it's a reversal pattern to the downside. So the market has formed a reversal pattern to the downside. This is our ascending channel to the upside, which is a reversal pattern. So let me remove that so we can dive deep into. And now looking at our structure, you can see we had that impulse to the downside. That's our impulse, which shows that we are moving to the downside after having an ascending. We have reversed. Now we're moving back to the upside. But the way we're moving to the upside, we're moving progressive. We're moving with less progression to the upside, which we're moving correctively to the upside, which shows that it's forming some structure after that impulse. So the structure that forms after the impulse will dictate the direction of the next impulse. So analyzing at our structure, let me mark this inflection point. So this is the highest area that the structure is reaching. So let's mark our structure, which is, you can see our structure is forming a bearish pattern, which is a continuation to the downside. Let me mark the lows of the bearish pattern so you can see it clearly. You can see after that impulse, this is arguably a bear flag to the downside. You can see that means that after this impulse, we had this correction. Now we're expecting another impulse to the downside. I said the structure after the impulse will dictate the direction of the next impulse. So the question is that structure a continuation or a reversal? Looking at that structure, that's a continuation to the downside. So that's where we're looking to be heading in the market. We're looking to be heading downside. So moving to the 4-hour time frame, we see we zoom in closer into this structure. We're seeing how the last leg of the structure is approaching that high there, is approaching that third touch of that trend line. So how we're going to take the trade is going to be based on how the market nature moves to the third touch of that trend line or to that high there with that we have marked. So looking at different scenario within the market, first we've been moving correctively. If the market continues to move correctively to that area or breaks up the area correctively, it shows less progression to the upside, even though it's moved to the upside. But if it moves correctively, it's not a progression. Unless it moves impulsively to the upside, that shows progression to the upside. But now, if it moves impulsively to the upside, we'll have to wait for continuation for that move to the upside for us to start saying, okay, we're looking for buys. But however, nonetheless, what we're looking for is that even if the market impulses down, we will be looking for the impulse to the downside and then start taking ourselves. If we have a continuation pattern, we could take a 15 minutes flag or any flag that continues to move to the downside, because the high time frame says we are going to the downside. So moving into the lower time frame, this is where we enter our market. So it's very important that we look at the market nature at the 1-hour time frame. So looking at the 1-hour time frame, you could see it's still the same. It's just a corrective move. The market is just moving correctively. So the probability within the market is that the market could continue moving correctively to that high or even break that high and break a bit of the trend line, which still holds the probability of the market moving back to the downside. So after that correction, we'll be expecting an impulse move to the downside, then a tight flag to continue our move to the downside. That's what we'll be looking for on the USDJPY on the first scenario if it continues to move correctively.
Everything and start analyzing. So on the CAD Swiss, you could see what we have here on the CAD Swiss. This is our high, and this is our previous low. Now, what happened is that the market has broke our previous low and it has spiked on the previous low. This is a signs of rejection from the market, and this gives us a probability that this could just be a push back to the upside. So this is probability. We see that on the weekly time frame. You can see the candlesticks there. So what I can see connecting here, I can see that this separating structure, utilizing structure separation, I can see that, okay, this structure, I could separate it from the rest and say, okay, this is our ascending channel. It's very intuitive that you could say the trend line, you could start a trend line from here. It also still makes sense because it will still be the same thing, which is an ascending channel. But for me, the structure has to make sense. You have to place your trend line in a way that the structure makes sense. So the structure has to make sense. If it doesn't make sense, probably the trades also won't make sense. So that's what I see on the daily time frame. I see a reversal at the low of the structure. This is a high probable move to the upside. Now let's dive deeper into the structure. It's very clear because you can see we had this double bottom inside the ascending, which is a high probable trade. It's showing we have an ascending at a low. We broke the low. We rejected on the weekly time frame. Now we're having a double bottom, and then we had a push up of impulse. We had a push up of impulse, and then now we form this correction, and then now we have another impulse. Now we in another correction, which is probable that we're gonna have another impulse to the upside. So diving deep into the structure, that's what I could see from now. Let's connect the lows of the structure. We can connect the lows of the structure. Looking straight into the structure, you can tell that this is a bullish flag, which is a continuation to the upside. So our best bet, highest probability that we have, that we could be continuing to the upside. But if we dive deep into the structure, how would we take such a trade? Now let's adjust our trend line on the lower time frame to make it make more sense for us. So it's very probable that if the market passes back down, this will be best bet that we could use candlestick confirmation to take the move to the upside. We could use candlestick confirmation, you know your candlesticks, different types of candlestick that you can use to take this trade to the upside. Or what we can utilize, you could see it's that, or here we could just understand that, okay, the market has reversed here at an early stage, and you can see here the market approached this area correctively. Let's just connect here. See, okay, so what the market rested an early stage. See, that's some ascending and also a double top, a double bottom rather. We had an ascending within this structure and we had a double bottom, then we impulse up. So it's justifiable that you take a reduced risk entry here if we have such a tight flag here. But it's very unlikely that we're going to have a tight flag like that because it's probable that the market's going to open with a gap for the weekend. But this is what I was looking for on Friday. This is what I was looking for on Friday. But okay, if we have such a correction, that would be a high probable trade for you to trade. And we'll be managing it very aggressively, looking at this trend line. Then the third pair on our top six, we have the Australian dollar versus the New Zealand dollar. So starting on the weekly time frame, we mark our highest high there. You could argue that, okay, this is our low, the lowest low of the structure. Now our focus would be at this part of the market. We ignore this previous part, we ignore, then we focus on this current part of the market. So this is where our current focus is. So let's connect the highs there. Remember, you have to connect the highs and see what structure is forming. Always connect the highs in a way that the structure makes sense to you. The structure has to make sense to you. If you're connecting the highs and the structure doesn't make sense, remove the trend line. You just don't put the trend line everywhere where there's highs, where there's low. If the structure doesn't make sense to you, it's probably advisable for you to remove the trend line. Then as you can see, we had that channel to the upside, then we impulsed with high momentum to the downside. You can see that's a high momentum impulse. And we're having this correction now. Let's dive deeper and see that impulse correction move. Now looking at this high momentum impulse and now forming this correction, you could see that okay, it makes sense that the market could just be forming a continuation pattern to the downside. This could be what the market nature that the market is showing us right now. This is what we could only see on the weekly time frame. We couldn't see that on the daily, not very clear. So let me move on the 4-hour time frame to dive deeper inside this. This impulse, we had this impulse, now we're having this correction. Then we could have a move to the downside. That's our first bet. Or the market could just continue to correct until it reaches here and give us a double top and then move to the downside. That's another bet, and we'll be looking for buys all the way to move to the upside. So that's the possibility, but the probability is what we're looking at, which is the third touch here and then to the downside. So let's zoom in to see into structure. So we're zooming in, you could see the way the structure has been moving. This is how the market structure has been moving. It's been moving with high momentum to the downside, now impulsively moving. This could be a continuation, then giving us a third touch there. If it continues to move impulsively to the upside, it would not be advised to take a risk entry with high momentum, because high momentum could just continue moving to the upside. So rather mitigate that by waiting for a push down, then a correction to take the move to the downside. So inside structure, for me, it's advisable to take a 15-minute pattern, continuation pattern, a 15-minute pattern, and take a risk entry within that 15 minutes pattern, because we're inside a bigger structure. So we're just using that 15 minutes as a confirmation, not as what we're looking into the trade. It doesn't give us the trade, but adds the confirmation. So that's my advice on that. So looking on the 1 hour, as we said, this is where we execute the trade. You can see it also shows that on 1 hour, the last part of the structure is just corrective, but remember, the overall path was just impulsive. So what we're waiting for us to get a risk entry, we're waiting for a third touch pattern, which forms a confluence with that trend line, or a bit of a break. Also makes sense, just tiny bit of a break. Candlestick confirmation. We have this type of third touch structure here. Could really make sense for me if we have such third touch structure like this. It could really make sense for me to take a risk entry. But beside that, if it continues to move correctively to that area or impulsively to that area, I'm going to have to wait for push down, then a tight flag, continuation to the downside. And moving in on the fourth pair on our top 6 pairs of the week, of the upcoming week, we have the New Zealand dollar versus the Canadian dollar. So on this currency pair, this is a pair that I have already taken a trade on Friday. I've moved to break even due to moving into the weekends. There's a lot of uncertainty when you let a trade. You leave a trade with open stop loss when you're moving into the weekend. As you can see, it's just a clear structure moving to the low. We've moved to the low of this pair. You can see here the market has just moved correctively, approaching this low. The market just moved correctively approaching this low. Then it gave us a high momentum impulse. See, market nature just repeats itself. Impulse, then it just corrects. Then corrects. Now we're looking for that impulse. So that's what we're looking for. So within that structure, that's where we dive deep into the weekly time frame. This is our continuation structure. But one thing that could put into negative confluence into this while looking at the structure, it's the size of the structure itself compared to the previous impulse. If you look at the impulse, the structure is as big as the impulse. So it's the same, almost the same size as the impulse, which makes the structure more neutral than one-sided. So this could just be another structure moving to the downside. This could just be the possibility, but not the probability. The probabilities after an impulse, we look for the type of correction we formed, and the type of correction we formed, it's clearly a continuation pattern. So now we're hoping to continue to the upside, moving to the 4-hour time frame. You could see after that touch of this bigger structure, we had our impulse. After we had this impulse, we had this structure. After here, this is where I took my trade on the 1-hour time frame. What you should do in the market, trade the probability and have awareness of the possibility. So this is a pair that I've put on the top 6, number 5. This is the 5th pair on the top 6. And see, we've completed our move to the downside, then started our move to the upside. Okay, and we move drawing. We've been moving to the downside. I'll leave the drawing. We've been moving to the downside, completed that move to the downside, and now we started with a move to the upside. Let's move to the daily time frame. This is the closest high we are next to, and you can see this as our move. With this impulse to the downside, then we started to have this correction, then we formed this impulse to the upside. So after that, we're looking into this structure. See the 4-hour. You can see we're close to the high there of the area. You can see we've been approaching that high in a corrective way. We've been moving very corrective to the upside, very corrective to the upside, very corrective to the upside. Then we finally impulse to the downside with high momentum. After moving correctively to the upside, then we move with high momentum to the downside. So remember, on the daily time frame, I said this gives us a probability of a buy, but on the 4-hour time frame, we're looking that, okay, we're having this correction to the upside and this high momentum impulse to the downside. So we're forming another pattern, which is not a clear pattern at the moment, but you can see this is forming in a way to create a bear flag to the downside. So this is a possible bear flag to the downside. Clearly on the 1-hour time frame, you could see so this is what we're seeing, a move. This is a move that we are anticipating that this could be our move to the upside. We could retest that inflection point there, then continue this move to the downside. Yeah, so I'm very neutral on this British Australian dollar pair. I'm very, very neutral on it. So somewhere there, I think 45 pips, somewhere less than 50 pips will be okay. Just somewhere there. Looking at the reward, I'm very neutral on this pair. Then the last pair on our top 6, we have the New Zealand dollar versus the Japanese yen.
Now we mark the lowest low of our structure, and then after that we mark the highest high of our structure.
1 second. Moving into the daily time frame. Moving into the daily time frame, you can see we're moving to the upside correctively, but here on the daily time frame, we can see we've been having a few impulse candles to the upside. So the Japanese pairs have been showing us impulse move to the upside. So we've been moving correctively to the upside, and this is the high that we have formed on the structure. And how we're breaking that high, we're breaking it very impulsively. So for us to start taking buys, we'll need to actually break it from a correction here, which will be a continuation and targeting that highest high. But now that's another possibility within the market. But looking at the way the market, overall direction of the market, you could see that the market has moved quite correctively to the upside. You could say, okay, the market is reaching the structure, forming the double top quite correctively to the upside. Only the last touch of the structure there. On the last touch of the structure there has been very, very impulsive. It's been very, very impulsive. So if we get a rejection there, we will not take any sells immediately, but rather wait for push downs and then a continuation flag to the downside. So what I'll be actually looking for is a push down below this area, has the highest probability, a push down below this area. Then I'll move to the downside, very impulsive. So it's showing a bit of progression to the upside. So if we continue to move impulsively, would wait for correction to the upside, then start taking buys. But for now, what we're looking for is for, even if it breaks, forms a double top, increases the probability, impulses down and starts to correct, and then moves to the downside, or that to move correctively, forms a channel, then impulse, then correct to the downside.
That's all from our top 6 weekly pairs. Have a good trading week. Shout out.
They gon' love me for my ambition. Easy to dream a dream.